Thanks everyone for joining us and sticking around. And thanks to my panelists for joining me up here. We've got a great lineup here, so hopefully we can dispel some myths and put some interesting analysis to the industry. So I was thinking the long-term demand fundamentals from what we've heard so far throughout the conference and from some of the companies here today certainly have looked quite strong. But are we all in agreement with that? And perhaps we can have a short introduction from each of you so that we know what sort of perspectives we're coming from here. So Philip, as the buy-side guy on the panel here, what's your feeling towards the demand side outlook?
Once again, Long-Stay Investment is a buy-side fund. We invest primarily in mining, oil and gas. On battery materials, we are very bullish on the demand side. Obviously it's driven by a lot of different factors. EV being one of them. Accounts for about 25% of the battery usage right now, or the lithium usage right now. But it's going to go up, substantially over the years. It's growing at about 50%. Industry believe it's going to grow at 50% per year. And then storage is going to be another big part of that. So we believe on the long-term basis, there's going to be a lot of strength in terms of demand for lithium and other battery minerals.
So, let's focus on lithium. Are you bullish on lithium, or it depends how far you look, I suppose?
It really depends on how far you look. The industry expectation is that the supply side is going to be bringing on a lot of new capacity, especially before 2025. There will be significant capacity being brought into the market. So the industry expectation is that right now lithium carbonate is trading at about 12,500. Lithium hydroxide, is about 12,500, 12,000. Lithium carbonate is about 11,000. People do expect that both prices will go down. The expectation is that over the next few years, carbonate probably will go down to maybe like 9,000. Hydroxide could be even 8,000. So in the shorter term, there could be some volatilities, but in the long term itself, beyond 2025, obviously, there will be additional supplies coming in, but demand will exceed that. So we do expect the price to go up substantially, from then on.
Chris, you wear many hats, many perspectives on this, but are you bullish on demand?
Sure, I think, to echo Philip's sentiments, it's hard not to be bullish if you're thinking out, 2025, 2030. I think, for many of us probably up here on stage and certainly in the room, 2016 and 2017 were fantastic years. And 2018 was a little bit of a gut check, to say the least. And I think 2019 has been similar because, let's face it, we can argue about whether or not lithium or cobalt are commodities or specialty chemicals. They are trading and they're behaving like commodities. So price goes up, everyone gets excited, the juniors get a nice tailwind, and of course when price mean reverts, as it has in the way, I should say, as it has for cobalt, you see what happens to the share prices. So, I think just to address pricing, I don't look at any lithium project out over the next 5 to 10 years without sort of the price in the back of my head of around 11,000 tons on a blended basis. $11,000 per ton on a blended basis, maybe a slight premium for hydroxide. Cobalt, I could see a slow grind higher to maybe the mid-20s, $20 per pound. And again, that has everything to do with what you had mentioned in your presentation earlier about, less cobalt per battery, but many, many more batteries out there. So, I think that we're in kind of a cyclical rut amidst this sort of backdrop of this very strong structural change around mobility and, of course, energy storage. And that's what has everybody excited. On the oversupply thesis, I still think, with respect to lithium, I think it's nonsense. And, I've been pretty public about that. There is an oversupply of spodumene concentrate in the world right now, sloshing around in China. When you talk to these Australian producers, they've got spodumene coming out of their ears, more than they know what to do with, more than they've contracted for. And so that has obviously taken the spodumene price from around $950 a ton down to around $600 a ton. And I think it could go lower. I think you could see $500 spodumene before, things rebound. That has not directly translated into, at least in my opinion, lower carbonate and hydroxide prices yet because of the conversion issues inside China. So, I think everyone's sort of, the question I get right now from investors is, when is this all going to turn? And, everybody's asking that question right now. My personal view is, it's going to take, with respect to lithium, probably another 12 or 18 months before the market really balances, and I think you see a new upcycle with respect to pricing. And on cobalt, again, much different story, much different scenario. I just see a slower kind of grind higher there, not some parabolic move anytime soon.
Yayoi, let's go a bit downstream a bit, but come back to this demand story that we were focusing on before. Do you want to take us through?
Yeah, sure. Thanks for kind of giving the introduction on the supply side. And for those of you who don't know me, I'm Yaya Keaney, and I am one of the energy storage analysts at Bloomberg NEF. And so my job is actually to look at the demand side and understand the fundamentals on what drives the demand for batteries, for particularly stationary storage. But our team globally, we look at demand for passenger EVs, for batteries for passenger EVs. We look at the technology piece, and we kind of try to make sense of is there enough resources to meet our forecasted demand, and how much circularity there is in that. And so just to give you perspective, like the sector that I cover, which is stationary storage, it doubled in terms of market size between 2017 and 2018. So we're talking about an annual capacity installation of about 4 gigawatts, 8 gigawatt hours, which for anyone who knows anything about power is actually very little. It's the size of maybe 4 gas plants at a global scale in terms of demand. But we're expecting that market to basically double over the next 2 years again, and basically grow by 5 times over the next 7 years by 2025. But in terms of 2030 demand, and where we see the demand for batteries, if we're looking at all segments, including passenger EVs, we're actually saying that by 2030, the demand for stationary storage batteries is about 7% of the 2030 annual demand, with the bulk of that being met by passenger EVs. So really what's moving the market is kind of the transition around electrification of passenger EVs, and increasingly we've been looking at commercial trucks as well as e-buses as well. But passenger EVs by far is the biggest. And when we're talking about the 2025 timeframe, we're kind of talking about the demand being very much focused on demand centers and policy. And there's a lot of risk that, I mean, not to say that there's risk that policy or subsidies will cease to exist, but at the moment, because electric cars are not necessarily cost competitive up front against an ICE vehicle, you have to get to the point where it is competitive, and that really only starts happening in the mid-2020s.
What are some of the triggers, do you think, that might get that price down, get the cost competitive? Is it subsidizing? Is it the cost of batteries, cost of car production?
Yeah, so there's kind of two ways to look at this. One is for the cost of batteries to continue to come down, which, by the way, it has massively come down over the last 10 years. We're talking about 85% drop in the prices of lithium batteries since 2010. Volume-weighted average last year, 2018, was $176 per kilowatt hour. How can we continue to see that cost decline? The way we kind of infer the cost decline is essentially looking at how much prices of batteries have fallen historically as a function of total demand, and it's about 18% drop in prices. So every doubling cumulative demand for batteries, there's about an 18% drop in prices. And essentially, we're kind of extending that curve forward to see when do you get to the $100 per kilowatt hour. And that happens about 2024. It's about $94 per kilowatt hour. How we achieve that, or how has that been achieved historically? It's about scale. A lot of it is about kind of supply and demand and manufacturing capacity, and increasing the kind of the output from one given facility and optimizing that facility. It's about new technologies obviously playing a key role there. And then in terms of, we think that that's $100 per kilowatt hour is probably achievable with current technologies, or the pathways with the current technologies around lithium-ion batteries. There's some risk associated with commodity prices and metals. And, well, I'm going to stop there because I can talk more, but we can talk,
Okay.
talk a lot already.
Yeah. Kimberly, take us through your perspective as primarily a chemist by training and your
Well,
projections. Did you agree with some of Yayoi's projections around the 2030, or you guys have some slightly...
We agree with Yayoi in a lot of ways. So the 100 kilowatt hour is sort of it's a stake in the sand. It could be on either side. It's basically an industry-wide goal is to get to that point. The question is that are we going to have ice parity? That is meaning that the same amount for an EV as for an internal combustion engine, and that's sort of what it is. What everybody is expecting to be, and whether it's going to be through subsidies, without subsidies, is that magic number of 100 kilowatt hour, is that going to achieve that? And I don't think so. I think that there's a lot of other things that have to happen, mainly on the auto side, because right now you have a powertrain that is essentially an ICE vehicle, and then they just replace the engine with a battery. One of the things that that you have to keep in mind is that when you have a gas-powered vehicle, the weight of that vehicle goes down as you're driving, but with a battery, it's the same weight all the way through, and so there's these aerodynamic functions that need to happen as well, and so a lot of the engineering on the powertrain side will also help bring to ICE parity, meaning that you've got dedicated lines, you've got dedicated technology to try and lessen the weight of that battery pack, as well as just trying to make sure, because that weight and the battery, that's basically the two things that will have to happen in order to achieve ICE parity. And so another thing is that on the battery metal side, we're obviously very bullish on the battery metals. We wouldn't have hired me to look at battery chemistry if we weren't bullish on battery metals. And I think that I agree with my other panelists that it's a correction right now. I just don't think that, I think that everybody's sort of thought that it was going to be one way. And from my talk earlier today, you could tell that it's not going to be one way. And I think that there's going to be, every OEM is going to have their different sort of chemistry. They're going to have a different way of doing things. It's very similar to the internal combustion engine. BMW does things differently than Mercedes, and that's the differentiating factor. So I think that that's what's going to happen. And so we're going to see a lot of different ways, and I think a lot of the battery metals, I think you're going to see some additions. I think you're going to see in the power storage side, you might see some vanadium becoming a battery metal story as well. Like we've got some things that magnesium could end up being a battery metal story. So there's a lot of research to try and solve the cobalt question, to try and refine nickel, to try and solve these issues on that side. So I think that there's going to be a lot of different. I think in 5 years' time, we're going to see when we talk about battery metals, it won't be just about nickel and cobalt.
Okay, so we touched on the demand side of it, a little bit on the supply there from Chris, but what do you see as some of the risks on the supply side to some of these metals? So Kimberly, you want to reiterate on some of those that you just mentioned?
On the cobalt side is definitely the fact that it's owned by a country that has a lot of political risk. And, we don't talk a lot about political risk in North America. I think that it's definitely something that's the OEMs in Europe and in the US are very worried about securing these supply chains. And, they are going to work really, really hard to get to secure those supply chains and remove elements that are considered toxic to their public image, considering now we're in an era of ESG and a lot of people asking questions that's going to have to be cleaned up.
Okay. ESG on the supply chain risk, that's a good point there. Anyone else that want to add add to that or add further comments on supply chain risk at all?
I guess I can add to that, like just as an example, like BMW committing to not sourcing cobalt from the DRC is kind of a big commitment. And if all auto companies were trying to follow the same trends, there wouldn't be enough supply from non-DRC countries to meet their demand for cobalt. Mm-hmm. And obviously, like there's a story around like the the battery tech itself, I guess the battery chemistry moving away from cobalt, but with the prices of cobalt and lithium really having dropped significantly over the last year, that push doesn't become as urgent as it was probably a year and a half ago. And I mean, the other interesting fact when I was looking at this chart, I was kind of like quite shocked, and maybe it's not really surprising for most people in the room, was like when you actually look at the production of cobalt in the DRC and the ownership, like 57% of the ownership of the cobalt mining in the DRC is actually from Chinese companies. So it's not just the DRC, it's DRC and China story still on the cobalt side, and as much as probably any other metal.
I agree.
Yeah, I with respect to cobalt, I think, if 2/3 of it is sourced and originates from the DRC today, I think probably in 5 to 7 years, 70 to 75% of it will come from the DRC. And, there are probably two ways to take that. There is obviously this enormous spotlight on the country in terms of artisanal mining and so on and so forth, and also child mining. And I think that you're starting to see Glencore and Umicore team up and talk really seriously about a more sustainable, visible supply chain around cobalt. So, and BMW is an example. But, when you think about cobalt, I mean, I think over 95% of it is mined as a byproduct. So you have to think about copper prices and nickel prices and also other parts of the world. And those CapExes, I mean, what is the CapEx for a large nickel project these days? Like $1 billion? I mean, that's a pretty big ask in any market, especially if you're trying to get cobalt as a byproduct. So, my sense is that the DRC is always going to be the 800-pound gorilla in the room with respect to cobalt and cobalt availability. You are going to start to see and hear a lot more about recycling as one of the ways to kind of circumvent DRC dependence, but it's going to make a small dent, if any dent at all.
And just on the point of recycling, you're involved in some recycling projects yourself. That's a small segment of the industry at the minute. Do you see that growing quite a bit more as OEMs become a little bit more anxious around this, or the value chain is pushed from perhaps a policy side of things? Sure.
I mean, I'm talking my own book egregiously here, but yes, I do see it becoming very important. Very soon. No, I do. Here's the issue. So, if you're in the European Union and you're VW or you're Daimler, the government over there has basically gone to these OEMs and said, okay, we want to push electrification for all of the reasons that we all know about. And by the way, at the end of the useful life of these batteries, whether or not it's 8 years or 10 years or whatever it is, those batteries are your problem. Okay, they're not going to end up in a landfill. They're not going to go in some warehouse and just sit there. You're going to have to do something with them. So you either refurbish them for energy storage, or you recycle them. And so, recycling is already a very, very big business in China. About 100,000 tons of batteries, lithium-ion batteries, were recycled just in China alone last year by a company called Brump. And so Umicore is getting into it. The company that I'm involved with, again, on a much smaller scale, is getting involved. But you're also seeing, in particular in China, companies like Ganfeng Lithium approach the lithium market with this, I think they're calling it their own ecosystem. And one of the big kind of spokes on the wheel or rungs on the ladder, however you want to think about it, is recycling. And so they want to take everything internal. And the OEMs, thus far, from my perspective, want to do it differently. They're not saying, okay, recycling is something we know we need to do, but we don't necessarily want to have to develop our own process or build out the infrastructure. So we will, give it to whoever, is available to recycle it out there. And thus far, the economics have always been, I guess, the argument against recycling, but that's going to have to change.
I just want to quickly touch upon the fact that, Kimberly talked about the fact that the 811 battery is, pretty far away from coming into fruition, and the fact is without cobalt in the battery itself obviously affects the stability of the battery, and so we just don't see if there's a effective way for us to get away from cobalt, and the fact that DRC controls such a large amount of the cobalt supply, it is always going to be an issue that the industry need to address on the supply side. There are projects out there in other part of Africa, in Idaho. Idaho, that people look into, potentially producing cobalt from there. But once again, those are the projects that are very, very early stage, and we just don't see, if there's any possibility for those, productions to come in to potentially replace some of the existing demand.
Oh, absolutely. Absolutely.
Okay, so plenty of risk out there, but where's the capital going to come from to bring this supply online? Who's writing the big checks at the minute? What's really interesting you, Philip? Maybe we start with you. Are you looking to be deploying significant capital in the batteries class at the moment? And what are the miners doing that it's exciting you, if there are any out there that are exciting you?
I think given the market condition, it's going to be difficult for any banks, to come in and, maybe put in significant capital on project finance itself. Strategic investors probably going to be, the one that are deploying capital in funding some of these projects. There are studies out there, that talk about, if all these projects, before 2025 that needs to go into production, $10 billion will be required. We will see, probably a lot of them won't get the relevant financing for it. We think that, we look at some of the transactions, that are recently done. Ganfeng, for example, they acquired 30% of Bacanora in Mexico. These are the guys who can actually go around and really look at different projects to see which are the one that they want to get into. There are a lot of companies out there, some of them have stronger staying power because they have cash in the balance sheet, and they can, wait it out, and they have the projects ready to go, if they get the relevant financing, and they're just waiting for strategic guys such as Ganfeng or could be like West Farmers to go in there and actually start helping them, with the financing itself. So we see strategics and companies that are really interested in getting a footprint into the lithium space or battery mineral space as the one who can write checks and really get into the market at this very strategic time, when the market price is low.
Okay. Would anyone else agree with that sentiment? What do you see in terms of the capital flows? Kimberly?
Well, absolutely agreed. There's also, the OEMs are putting in billions of dollars, and one of the things, like, I used to be in biotech, and so like $15 million financing was a big deal, and so when I wrote the research report, our auto analyst was saying, I was saying, come on, this number is big. I'm not really comfortable saying this, and he was like, this is a drop in the bucket. These guys, what they're doing is they are investing in 10 or 15 solid state companies, private, public. You might hear of them, you might not hear of it. And they're gonna, and one of them, hoping one of them will be, and they're not hoping one of them will be the success, and we'll figure out something like solid state, and that's what's happening. At the research benchtop level, there are, for example, Tesla has a great relationship with Dalhousie in Canada. It was Dr. Jeff Dan, who's the research chair for Tesla, and he does a lot of the benchtop work. And so you're seeing all of these OEMs giving money to research labs and figuring out which one's going to be the best one. So, on the banking side, I think, you're a little hard on the banks, but I do believe that the OEMs are definitely, they're looking at this very, very seriously, and they're putting serious money behind it.
Anyone else on the capital flows or anything?
Yeah, I'm just going to agree with that, the OEMs, because if you're concerned about the security of the supply and you believe that EVs are going to happen, and you're a car company and you want to ensure that increasingly, as you said before, like, companies care about sourcing of their materials, and OEMs increasingly care about that because their clients care about that, or their customers care about that. And so, there's kind of the strategic investment into kind of securing supply for your own demands, but there's kind of just generally investing to secure your own supply. Well, I don't know if that made sense in terms of it being different, but so I see, like, Toyota, for example, having invested in directly into mining in Argentina. Like, they didn't really have an EV once they made that announcement I guess a year and a half ago. And so it's kind of like, well, you might not even believe that EVs are going to happen, but if you don't have a stake in it and it does happen, then you might lose out. So I think there's kind of that.
Yeah, and speaking of having a stake, I think it's been interesting to see how the oil and gas super majors have been noticeably absent from direct investment into the mines. And my sense is that they've realized that they're good at drilling and so on and so forth for oil and gas, and mining for lithium, for example, is totally different. And so where you have seen them make investments is with charging infrastructure, for example. I mean, Shell, I think, invested in a charging infrastructure group in the UK and spent maybe 25 million pounds. Their R&D budget is like 25 billion. So, it's kind of a brilliant asymmetric move for them in the sense that they get a front row seat to what's happening. They can really understand if vehicle electrification is an existential threat to their business or not. And they're investing in a certain part much further downstream of the supply chain. But I wouldn't think you would see an Exxon or a Shell, go into Argentina or anywhere for that matter and gobble up lithium assets. Or another way to think about it is where are the large mining companies? Rio Tinto, BHP. I mean, they've all got their slides and their PowerPoints about new energy metals or whatever it is, but they're not making the bets. They're not putting their money where their mouth is. And it might have been just this morning I saw Rio Tinto is going to put Yadar on the shelf. So they're not going to develop this extremely large, high-quality lithium asset. And so, that's 35 or 40,000 tons a year that I think a lot of investors had in their model out in, say, 2024 and 2025. That's not going to be there now. And so, the funding is going to become a bigger issue, I think.
Any other thoughts on where that funding might be coming from?
It's been Chinese. It's been Chinese. I mean, Ganfeng is the name that rolls off the tongue. I think the Wesfarmers deal for Kidman is really important, and I think it's a great deal for them actually. If you depending upon how you look at it from a valuation perspective, it's a steal because that's a great asset, but it's going to have to come from those types of entities. I mean, when I spoke to Wesfarmers, they said, we're kind of the Berkshire Hathaway of Australia. And I said, okay, sounds great. If so. But my point is you need those large pools of patient capital. Maybe it's pension fund money, maybe it's insurance company money, but it's money that isn't necessarily worried about what's going to happen in 12 months and is thinking about, okay, what is our investment window? What is our return time frame over the next 60 months? Something like that.
Yeah, I agree with you, Chris, on this one. The investors, that are investing into the sector right now, they must have a long-term view on that. They're really not looking into like a 2-year or even like a 3-year horizon. They're looking for maybe like until 2025, when the market really turns. For them to get into the market right now with a long-term horizon, this actually is a very, very good opportunity at this point. And other potential investors, group of potential investors that I think of is, obviously, the government itself. Obviously, we have Investi Quebec over here. I'm really interested to see, what Nemaska, is going to be coming out and, raise additional monies in the near future. I really want to see, how, the government may potentially participate in that as well, and together with some of the other investors.
I'd like to open it up to the floor, actually, in case there are any questions we haven't offered around. Has anyone got any burning questions you want to put to the panel at the moment? Just raise a hand and we'll come round. Or if not, if we're all a little bit drowsy, waiting for a drink, we'll just continue here.
Can I ask a question?
Yeah, absolutely.
Yeah, wanted to get your thoughts on different battery chemistries for energy storage. I mean, I remember, I think it was November of last year, vanadium was all the rage. The price was going through the roof. Price corrected. Now all of a sudden everyone's saying, I'm not so sure anymore. So can you just maybe enlighten the audience with respect to either second life for lithium-ion or your views on some of the other technologies?
Yeah, so I think it's really interesting to go to a mining conference versus like a storage conference because it's like vanadium gets talked about here. Vanadium does not get talked about much in the storage conference. It's not to say that it's not happening. There's a lot of companies, ESS, a lot of vanadium flow battery companies are basically looking to commercialize their first or their initial systems. But when you're talking about kind of where the technology is today, 90+% of batteries deployed or storage systems deployed are using lithium-ion batteries. And the selling point for vanadium flow batteries and a lot of the flow battery companies is some of them might be able to compete at an upfront cost. That challenge is going to become increasingly challenging as battery prices come down. Some of them are kind of pitching on the total cost of ownership, so we don't have to replace the battery over a 20-year period versus a lithium-ion battery where you probably will have to replace them all. And so the argument is you have to bet on the prices of batteries coming down massively for it to be competitive, and whereas if you're just buying the vanadium system or the flow battery system, you're probably not going to have to replace it and not worry about it over the 20-year period. But the challenge really is about how do you finance this technology that hasn't really been deployed at scale. Currently, the industry has massively consolidated around lithium-ion batteries. And that has happened for obvious reasons. But in terms of what are the companies who are supplying these batteries, we're talking about big chemical companies like LG Chem, Samsung SDI, Tesla, CATL, BYD. So it is about kind of the challenge around bankability of the systems. And then in terms of application, like what can you do with the batteries on the grid? Lithium-ion batteries are pretty good in doing like high-powered discharge and charge. It's pretty good at doing kind of 4-hour duration, probably more. So in terms of demands for where technology is, it really has consolidated around lithium-ion batteries. It's hard to, I guess it's kind of like, it's hard to see how other technologies are going to compete. And I think there is a space for them, but it's probably not the kind of 50-50%. It's probably on the 10%.
We have a question down here.
Thank you all. I just was curious, you were talking about the automobile manufacturers about doing strategic offtake. Why hasn't Tesla and Apple and these other companies who are the market leaders made any investments? What's been deterring them and going, downstream?
Tesla has always done things on their own. They do everything on their own. For example, if you go to China and you're a foreign OEM, you have to partner with another OEM, otherwise it's not lucrative, it's not profitable for you. So Ford and GM, they all have multiple joint ventures. Of course, Tesla didn't do that. They're opening up they're going to Shanghai. They negotiated a reduced tariff for their cars, for their vehicles, as long as they build in Shanghai. And it's not surprising that they do that. They have their own superstructure. They have a great partnership with Panasonic already. They don't need to partner with on the technology side. However, I'm sure that they are, making sure that their supply chain is secure. And in my presentation that I had just earlier, it showed that Jeff Dan, who's the Tesla chair, was able to remove cobalt from the NCA battery. It's actually a very small amount in the NCA battery. It's not as much as the NMC chemistry, but it's still this company is definitely trying to secure its supply chain, but it's not investing in the same way that the other OEMs are investing, and Apple is the same way. They're just keeping everything in house. And BYD, who's the top right now, who's the top EV company in the world, but I mean Tesla is definitely nipping at their heels all the time. They do everything in house as well. They do everything in house. They are LFP. They started as a battery manufacturer. So.
But not down to mining.
They do. Yes and no, because we don't. They're in China, so we don't know exactly what kind of agreements they have. I mean, they're not going to be. It's not like it is here. The Chinese market's very, very different. They're doing things there. They have an energy security issue with growing GDP per capita, and they have a huge pollution issue. So they're doing things. Whatever they do, they can do, we cannot do here. So they can actually have these heavy subsidies. Well, the government would be tossed out if they tried any of that stuff here. So, it's what they can do and what they've accomplished has only been because of the fact that, they've been able to force this to happen. But, and that's one of the things that OEMs outside, like BMW, Audi, and Tesla, they are very, very worried about the supply chain. Very worried about the supply chain because it's been cornered by the Chinese, by China. But they'll figure it out.
And I mean, Apple's largest supplier of batteries is CATL. Okay, and so they will probably be a larger battery producer than Tesla in the next 2 or 3 years. I mean, they're going to open a 100 gigawatt factory in Germany. They're talking about one here in the United States, although in the current political climate, I don't know how realistic that is. But, Apple hasn't been pushed to think downstream the same way that Tesla or some of the European automotive manufacturers have. And so they're thinking about it, and they're looking, and, they've all got these stealth teams looking at assets, but they just haven't been pushed in the same way that the OEMs have. And so will that change? I'm not sure. I'm not sure, honestly.
Any other thoughts perhaps on China then, if we step back a bit and take more of a macro view in terms of controlling the supply chain? It seems to be where all the big pools of capital might come from. China's going to make all the moves. The US has recently reviewed critical materials and put together a policy document on that. I forget what section number it was. But are there going to be moves by the US or other countries, Europe, what have you, to claw back some of that supply chain? Has China got too advanced within this on the macro picture? Any thoughts on that?
I think it's going to be very difficult, for the U.S. to play catch up. I think I went to one of the benchmark presentations recently. They talk about the U.S. supply, on certain minerals, including lithium and graphite and nickel, compared to China, the refinery capacity as well as some other processing capabilities. It is going to be very difficult for the U.S. itself to catch up with China on those areas. It is something that certainly from national security standpoint, I think we need to look into it. But the Chinese are very, very established in terms of the supply chain itself. So I think in the near term, that's something that we certainly have to work with them to make sure that we get the supply.
Any other thoughts on China at all?
The legislation that Senator Murkowski proposed about a month ago did a number of, I think, largely cosmetic things, very helpful, but cosmetic. And one of them was, of course, expediting permitting in the United States. I don't think you're going to see much happen before 2021, only because we're coming into an election year and no politician wants to rankle, any special interest group, whether or not it's the environmentalists or whoever. So, it's unfortunate only in the sense that it just does give other countries, the Chinese, the Japanese, the Koreans, wherever, an opportunity to solidify themselves in the supply chain. And even beyond Asia, which is really ground zero for this whole theme, I mean, you're hearing rumblings now. Australia wants to build their own supply chain. Chile wants to build its own supply chain. I think that's all interesting, but it's going to take millions of dollars and years to really rival what exists today in China, and took years for them to build as well. So no easy solutions anytime soon.
Am I the only optimist here? I'm the Canadian, that's why. I'm actually quite optimistic that they're going to catch up, because there's some serious money and some serious in the private sector that they want to ensure that this is going to happen, and that they're ensuring the electrification future in the United States as well as in Europe. Are they scared? Absolutely. Yeah. So when you get the fear, you always get the job done. So.
So we've got a couple of minutes left. If you were investing your own money, you're bullish on one of the battery grade commodities, what will it be? And in the near term, let's hear from you all to wrap up.
I would say, less on the commodity itself, but, specifically looking for companies, projects, that, fit into the criteria that I talked about before. Maybe, they have stronger staying power, they have, a stronger balance sheet at this point. They can wait it out. They have a good project, waiting to be developed. They could be strategic coming in, at this point, to deploy capital and help to develop that project. So, those are the kind of things that I would look into.
If I had to pick a commodity, it would be copper. And if I had to pick a theme or an idea, I think that a big part of getting these projects funded, whether or not it's lithium or vanadium, is financial innovation. And I think that one of the things that I've learned a lot about over the last 6 months is actually, this reason why I asked you the question about vanadium, is with vanadium at, I don't know, $50 a pound or whatever it is, obviously it's not economic, but there are new models that are emerging around leasing vanadium, which takes away the risk and also provides some very interesting returns for financiers and also vanadium producers as well. So I'm particularly bullish over the next few years on financial innovation, for lack of a better phrase, around some of these energy storage technologies.
That's interesting.
We're actually strictly told to not talk about investment at Bloomberg. We're not meant to give any investment advice. I guess we didn't really talk much about nickel though, and obviously if you look at the movement towards 811 and much higher nickel content and class 1 nickel for batteries, it's just I guess there's probably a lot more to be investigated in terms of supply demand balance there. So I think that's the one I'm going to end at.
And I would agree with you. I was going to say nickel. I was also going to say copper. But nickel especially because even if, I actually don't think that 811 is going to happen. So I've always been kind of bearish on that particular technology. But I think that any of the new any of the new cathodes are going to have nickel in it. So I think it's going to be really, really tough. I mean, I think that there's a lot of mines right now looking at cobalt, and once cobalt's out of the system, I think nickel's going to be there. And so I think that that's something that is going to be, that's a long-term thing.
Unless there are any other questions, I think we can leave it there. That's a very nice and succinct way to finish up. And I'd like to thank you all very much for your time and your expertise. Thanks to our panelists.